Welcome to IS Forex. I'm African Rebel, and this is where we guide traders from foundations to freedom. In this episode, I'll be talking about SMC lower time frame entry model or entry type. I'll be breaking down a Euro USD trade. I will be using the breakdown to explain to you guys how to filter out lower time frame entries or proper confirmed entries while trading. Alright, so without wasting much of our time, please, if you are yet to subscribe to our channel, don't forget to hit the sub button. Please don't forget to give us your likes, okay? Please like the video if you enjoy it. Say us your comment in the comment section, and let's get started. Alright, people, so I would have loved to do the bar play so that it can be easy and then for better understanding, but somehow I keep getting this message and I've been unable to reach out to my bank yet. I think I have to visit the bank for maybe a different kind of card. I don't know. So, people, this is Euro USD, okay? And as you can see on my screen, this trade is what I'm going to break down to you guys. I'm also going to use it to explain the lower time frame entry module for you guys. All right. So, like I said, when I hopped on the chart, since I can't do the bar play, I'm just going to use the horizontal rate to just separate where I came on and how I made the price and what I did. So I made the price around, let's say, 6 a.m. in the morning. I made the price like so around this level. Okay, price was like around this level. My focal point is, like I always tell you guys, the focal point should be the last swing points and then the last swings, so that you can be able to tell, or you can analyze the last swings to understand what will happen next. So this was my focal point. Okay, this was my focal point, was this swing point, because I know it is just standing there. It was the last high. Okay, we had this last high, and then where we price was coming from, we had this low, and then we had the previous low. Now the interaction between the two lows is what caught my attention. The interaction between this last low and this one, you see, we had a sweep, we had a low sweep. So we had liquidity being taken from equal people trading double tops and double bottoms. So you can see right here, a lot of double bottom traders would have executed already right here. You can see the rejection. All right, so when you execute, price make you comfortable, and then after that it came to take your stop loss. So that was liquidity from the equals, that is double bottom liquidity. So the moment liquidity was taken right here, from my knowledge and understanding of liquidity, I know definitely price should come to interact with the swing point that created the push that went to take the liquidity. This is the swing point that created this push that went to take liquidity from this low, right? From those people who bought here. So whenever price sweeps, since it didn't break, price have to push back to interact with that swing point, and then afterwards we can look for what price will do next. All right, now we're caught up. We already understand the bigger picture. The bigger picture of price should price to go down back to this level. So where we are caught up in is the in-betweens now. So first of all, I know very well there is an entry right here. After the push, we had a break and all of that. We had an entry right here, but we didn't, or we're not on the market by this time. I think this happened on Friday, so we're not on the market. So how do we scale in to join the move till we get to this level? It's where I was concerned, because I know price have to push up to this level. Now I use 3 time frame: the 15 minutes, the 5 minutes, and the 1 minute. Whenever I have scenarios where on the 15 minutes price is yet to meet a particular target on the 15 minute, I scale to the 5 minute to use the current structure, or the structure within, what we call structure within structures, to use the structure within structures, or the structure within the overall 15 minute structure, which is going to be more visible on the 5 minute, to use that structure to get myself an entry that will help me reach my 15 minutes target. All right, those of you who are my students, you understand what I'm saying. Okay, so immediately I saw this and I made price here, I knew that we have to battle our way to the upside. So I had to just go to the 5 minute. All right, I had to go to the 5 minute and wait for me to see if I can get a clearer structure to help me get to my 15 minute structure, because there's a lot of people to that level. So if you come to the 15 minute, the 5 minute right here, you can see now that our previous swing point is now this one, right? Whenever you switch on the time frame, your focal point should be on the swing point. All right, so the last 2 swing points on the 5 minute now is this guy, like so. This is the last low, right? This is last 2 low. This is the last current low right now, and then we had this high, and then we had this high. So the moment price broke above this guy, the moment price pushed like so and broke above this high, we know we are in an uptrend. And you can see price created a low here and then a higher low that is higher than the previous one. So we had a high higher than the previous one, so we are in an uptrend. Okay, so when I made price around this level, I knew price only going to do two things. Since we know from the 50-minute we have to catch up to that level there, price is only going to do two things. It's either price comes to break above this guy and then we keep looking for the pull down to give us another higher low, then we can keep buying, or price will just come and do some funny stuff, take liquidity and then just drop down. Okay, so I had this marked out and I was waiting patiently to see what price would do to my what structure within the low within the higher the 50-minute, sorry, the high within the 50-minute structure. So I was waiting for price to do this to my 5-minute high, then I'll know what price will do. Then you can see price significantly came through when played around. Then we had this significant high created here. This significant high was created here, meaning price broke above significantly. So whenever price breaks above significantly, now we are here, right? So whenever price breaks above significantly, I look at the push that broke a particular structure and then I look at liquidity at that level on the push that broke a particular structure. So if you look very well, if you understand liquidities, you can see we had a lot of them here. We have a lot of liquidity seated at this structure. You can see we have some like so. We have this trend line liquidity seated there. We had also this one is here. So a lot of liquidity level. So after identifying the liquidity level, the next thing I do is to identify a valid order block or a valid level where I know price will come to interact with. And yeah, there is a valid order block at the extreme of this. This is a valid order block. The candle in between is a valid order block. So I had that marked out, right? Now this is where it gets interesting about the lower time frame entry. The moment you see price interacting with your point of interest, that is where you go to your entry time frame. So price came, you can see price came, took all of the liquidity seated there, trendline liquidity, we had the engineered one, and also moment price came into this, I have to go to the 1 minute. So the 1 minute is my entry time frame. What I'm going to show you about on the 1 minute now, you can decide to do it on the 5 minute. You can decide to do it on the 2 minute. You can decide to do on any time frame that you please to be your time frame. It depends on you how fast you can catch the time frames. If maybe 1 hour is too, maybe 1 minute will be too fast for you or too slow for you. Depends on you. But this is how the entry goes. This is the lower time frame entry, which is the confirmation entry. So the moment price approach the point of interest like so, the moment price gets into it, I just go to the 1 minute and then I look for reasons to tell me that it is time for us to get in. So let's go to the 1 minute and I'm going to show you guys how it is being done. So this is the 1 minute, right? You can see the candle interacting with my 5 minute point of interest. Okay, with my 5 minute point of interest, you can see the candle market interacted with it here at first. So the moment price comes into your point of interest, you have to look at the way price came into your point of interest. So you can see here price had to give us a downtrend on the 1 minute to be able to interact with our point of interest. Why? Because our point of interest is below where price was, so it needs a downtrend like so to come. You can see the downtrend series of lower lows and lower highs, right? So the first interaction with my point of interest was at this level when price interacted with my swing with the point of interest was at that level. So immediately price came into it, I had to look at the previous significant lower high. So when price breaks the previous significant lower high, then I'll look for price to pull back and then I can continue. Since it's a downtrend, we need that downtrend to change to an uptrend. That is the whole scenario. So the last significant lower high was here, right? So I had to wait for price to either come and give me a change of character here, then we can continue with the trend. But you can see price didn't give a change of character there. Instead price swept and came back down. So the moment price was coming back down, and since it didn't give change of character, my focal point became that swing point. My focal point became the swing point that came into my point of interest. So I have to see what price will do to it. If price sweeps it, then I can still look for, when price will come and push, give us a change of character and all of that. If price doesn't sweep it and keep going down, I know it is going to be a failure. All right, so that's why the confirmation entry is very very essential. Sometimes price can mitigate your higher time frame point of interest. You can react, but it won't play out. After reacting a little into profit, you can just see it come down direct to take you out. It's because you didn't wait for the lower time frame confirmation. If you wait for a lower time frame to change the trend, to change the trend in which the price came into your point of interest, you have the chances of wins to be bigger than the chances of losses. All right, so we had a sweep of our significant low, right? We had a sweep right here. See, price came through and created what is it called? Pregnancy candle. Pregnancy candle created at the low is a bullish call. So we had this pregnancy created, and then we have to look at the last significant swing, lower high again. So this was the last significant swing, right? And then price break through it. Immediately price break through it, what I looked at for was the liquidity. You can see we had the straight line liquidity lined up here like so, and after the liquidity I had to look for either order block or um any of those stuff you look at for your entry. And for me, I had a fair valued gap right here. You can see we had an imbalance immediately after liquidity, so price mitigated our imbalance and we were able to trigger from there. And you can see my trade as well on your screen right now. You can see those are the trade, and we finally hit profit this morning. So the execution was there, and then we had to be safe on the stop loss end, so we have to be, give the market a little bit of breathing space. So we had to put our stop loss at the swing point that created the whole push. So the stop loss was there, and the target, we go back to the 15 minute, which is the originating trend. The 15 minutes are originating trend, or the buyer's time frame. We went back to the 15 minute to determine the target. All right, so overall it was a 1:15 trade, I think so. So we go back to the 15 minute to get our overall target, because we know price have to reach this level. So it is a 1:15 point. You can see right there, 1 ratio, I think it was supposed, yeah, 1:15 trade. And you can see we hit
It's 11 o'clock.
Thank you, Samantha. And you can see we hit our take profit this morning. So people, you can see this is pure price action. There's no bullshit, no long story. Take your time, learn it very well, rewatch the video, understand the concept before you practice in your live account. And please, if you enjoy our content, if you find it valuable, please don't forget to say us your comment. Don't forget to share the video with others who are also finding it difficult to understand this concept as easy as we do understand it. Don't forget to like the video. Thanks for watching, and stay highest.